sure you can see 2016. Okay, so for the remainder of our sessions, what I'm going to do with you guys is today we're going to do 2016, tomorrow we're going to do 2017, and then on Friday we're going to do 2018 if I have it. That's what I plan to do in the sessions that we have remaining. And then in terms of your test 2, remember I said we were going to revise that section that gave a lot of people challenges, that being the trial balance reconciliation statement. So I'm going to do that with the BCom law students, and I'm seeing them on Friday in the afternoon. But I'm going to upload it onto the YouTube channel, so all of you will have access to that revision. And likewise, I'm not seeing them for these past papers, so our revision, they're also going to have access to what we have discussed in the 3 sessions that I see you guys. Right. So I hope you guys have that 2016 in front of you. Okay, awesome. Right. So, yes? It seems like that. The other day I had only 1 student. So this is quite an achievement for me today. Yeah, quite an improvement, yes. So, yeah. But we've never done a revision together, right? Okay, you'll see. It really is just a discussion. And, oh, we actually did before your prep for test 2, or for your test. So you'll see it was pretty much the same thing. We're just going to read through the question, look at how we've answered it with the suggested answers. Because at the end of the day, now it's about technique and obviously answering the questions and scoring as high as you possibly can. But anyway, let's get into question 1. And I might be moving a bit fast, but it's just for the purposes of trying to get through it all. But if you have questions, do ask. Like, I'd rather just leave something out or just show you the answer and briefly talk about something than not address your actual concerns. So with question 1, under required, it says, for each transaction above, including the VAT transaction, indicate, firstly, the primary journal in which the transaction will be recorded, right name in full, no abbreviations, the impact on the general ledger, therefore, which account will be debited and which account will be credited. Then lastly, show the effect, therefore the increase or decrease of each individual transaction on the accounting equation. Hint, ensure after each transaction, your accounting equation A is equals to OE plus L is true, okay? And then there they show you, they say round all amounts to the nearest rand, and then they say purchase stationery, well, they give you an example basically. And you can see there they've given you the accounting equation with VAT in it, all right? Then they say Glacier wholesalers entered into the following transactions during May 2016, morning. Glacier Wholesalers is a registered VAT vendor. A standard VAT rate of 14% applies. Assume all amounts include VAT where applicable. Look at the example given before starting the answer. Okay, cool. All right. So here, can you see they didn't tell us that we're on the periodic inventory system. So we can assume that we are on the perpetual. If they don't tell you that you're on the periodic, then you can assume that you're on the perpetual inventory system. Okay, cool. So transaction 1, they say purchase inventory on credit and receive a credit invoice for 120,480, including that. Before any discounts, less 5% trade discount for bulk purchase. All right, assume the perpetual inventory system. Okay, right. So there, at least they told us. All right, cool. So here we are purchasing inventory on credit. So we know inventory is obviously going to be affected, and then creditors control is also going to be affected, okay? And then obviously we know that we can claim input VAT, all right, because our trading inventory is standard rated, okay? So obviously then we're debiting trading inventory because we know that it is an asset and it is increasing. And then creditors control, that we are crediting because now what we owe is increasing. And then we know input VAT is a current asset, so we're debiting that. All right, and then here they said under journals. I love this question actually, because here you can't do this question if your accounting is weak, to be quite honest with you. Because now you also need to identify the journal. This is obviously the creditors journal. So here I just put creditors, but this is the creditors journal, okay? And then obviously then you're throwing in the amounts. Now, the only thing to bear in mind here is, remember, they said less a 5% trade discount, okay? This 120,000 was before the discount. So what you then need to do is actually remove the 5% before actually entering it in here. So I see I actually made a mistake. I didn't actually take off the 5% before including it. So you should have said 95% of 120,480. Are you asking where are we? So sorry, it just dawned on me now. We are doing 2016. I think it was shared on the WhatsApp group. So if you can just open that up on your devices. We are in question 1. We literally just jumped into the first transaction, so you haven't missed anything. All right. So yeah, this is why I call these my suggested answers, because obviously they might be an error or two. It's not the memo, in other words. Okay, but at least as we revise them, I'll pick up on any of the errors that I obviously may have had, and then we can work on that together. Yes.
So the
1,000, yes.
it didn't include the 5%, I believe.
It didn't, because they remember it says received, including that before any discounts. Can you see that in the brackets? Before any discount. So that means we need to discount it first before actually putting the amount. So it should be, makes sense now. Okay. Yeah, I think these answers I was doing late at night because I seem to have been making that type of error on quite a few of these. But yeah, like I said, when we go through them, I'll obviously make you aware. So it's a very good idea to obviously run through the videos when you have some time after having practiced and compared. All right, and then you guys, remember, you guys are going to be examined on 15%, not 14%. So even if you do a past paper and it says 14%, my advice to you is just do it on 15%. So you keep practicing. Right, next transaction, it says cash sales according to the cash register rule, 53,580. Assume the perpetual inventory system, markup of 100% on cost price, okay? So cash sales, okay? So immediately we know that means sales is affected, all right? Bank is going to be affected, all right? And then output VAT is also going to be affected, okay? Now, which journal are we going to report these in? It's going to be the cash receipts journal, okay? So bank, we know we're debiting. Obviously, inventory is decreasing, all right? So that we are crediting, all right? Then we have output VAT, and then with we have, sorry, so here it was supposed to be sales over here, all right? Then output VAT, and then here we're supposed to, yeah, inventory is correct over here, but here we should have had sales, and then cost of sales. Okay. What was going on in this paper? Okay. Right, but then the amounts should be correct. Okay. Then the next transaction, the owner took 750 from petty cash to purchase airtime of 50 Rand for his wife and to pay the business driver wages. Okay, 750 was taken out, 50 Rand airtime for his wife. Okay, so 50 Rand is going to be drawings. Okay, and then the 700 is going to be salaries and wages. Okay, so petty cash, drawings. Okay, then the account to be credited, petty cash because it's going down, drawings is debited. Okay, and then here you can see negative 50 under assets because petty cash is obviously an asset. Negative 50 under owner's equity because owner's equity is a, sorry, not, what is this? Drawings reduces owner's equity. Sorry. Okay, then obviously the difference, like I said, is going to affect salaries and wages. Again, it's still affecting petty cash. So we're going to debit salaries and wages, or wages, because obviously that we know is an expense. We know that expenses negatively affect owner's equity. Then we know petty cash is decreasing, so again, a negative 700 under assets, because we know petty cash is an asset. Okay, right. Move on to the next. Guys, if you have any questions, again, please feel free to ask. Okay. Next one, the fourth transaction, it says purchase a computer for 17,100 on credit for use in the business. Okay. So which accounts are going to be affected here? We purchased a computer on credit for 17,100. Yes? Equipment, well, I'd prefer that you use, why is this thing not scrolling down? My suggestion is that you use computer equipment as opposed to just equipment. But yeah, just to be more specific. But yeah, you're 100% right. So again, it's going to affect your creditors journal. Okay. Then, like you said, computer equipment, you're going to debit that. Then we're going to credit creditors control. And again, now we can claim input VAT on this. Right? And then obviously the plus 17,100 under liabilities, because what we owe people is increasing. And then computer equipment, we use the VAT exclusive amount. That's why you have the 14,706. Okay. Again, because you guys are on the 15%, that amount is going to be slightly less. Okay. But otherwise, you will be within that ballpark. Okay. The amounts won't be too different. Okay. So you'll know that you're actually on the right track as you're going along. Then obviously the input VAT. Okay. Next transaction, 1.5. A debtor made a payment of 25,000, which was in full settlement of their account of 28,420. Ignore the VAT on the discount. Ignore the VAT on the discount. Okay. So let's see here. Made payment of 25,000 in full settlement. Okay. Okay. So basically here they're telling us that we need not pay on the discount. Okay, that's fine. So basically what they're telling us here is, you guys know whenever we have a settlement discount granted, we need to record the fact that, for instance, this person owed us 28,420, right? So the VAT, remember when we made this sale, we had output VAT that we owed to SARS based on 28,420. But now because we gave him a discount, we're basically saying 3,420, we need to reverse the VAT amount on that. Okay, because we didn't sell for 28,420, we sold for 25,000. Can you see that's how much he's paying? All right, so we've done those transactions before. But now what they're telling you there is ignore the VAT on the discount. So in other words, don't record that. Just focus on the VAT on the 25,000. So this is why we've done it this way. So here on your cash receipt, it's going to be in the cash receipts journal. Actually, here we actually weren't supposed to record any VAT. So this is another error. We weren't supposed to record any output VAT, and I'll explain why. Remember when a debtor gives us money, he already owed us, and we already recorded out of that when we first did the transaction. Does that make sense? So now when they're paying us, we're not supposed to be recording that again, because that will now be doing the transaction twice. Does that make sense? So here you're just supposed to have 25,000 under assets for bank, all right, plus minus 25,000, because your bank is increasing by 25,000 and your debtors control is also decreasing by 25,000. Does that make sense? Okay. So sorry about all the errors, guys, but I'm glad we're at least picking them up. Okay. Right. Any questions then? I can move on. Okay. Right. So transaction 1.6 says paid staff salaries of 27,500. Okay, that's pretty straightforward. We know that's going to affect your cash payments journal. Okay. When they say they paid something and they don't tell you whether it was out of the petty cash or out of the what was it? Paid on credit. They don't say it was paid on credit. Then you can just assume it's the cash payments journal. Okay. I'm sure you guys know this, but I'm just repeating for. So salaries and wages, you're going to debit that. Bank, you're going to credit that because it's going down. We're losing money. Then we know that assets is obviously decreasing as a result of that. And then your owner's equity, because of the expense, is now decreasing as well. Okay. Then 1.7, Gracia wholesalers return goods previously purchased on credit to the supplier, as the quality was inferior. The amount including VAT was 11,970. Assume the periodic inventory system. Okay, so this is why they were telling us on each transaction. Assume the perpetual, assume the periodic. So this was actually a very challenging question for most students, I would think. Because here they were testing your perpetual and your periodic and your VAT. So I think this is the hardest accounting equation you could possibly get. And you can see by the amount of marks they gave you there, 50 marks. So, I mean, your exam is out of 180. So if you didn't manage here already, things might not be looking so good for you. But anyway, let's get into it. So we are returning goods. So this is obviously going to be your creditors adjustment journal or your CAJ, okay? Then what's going to happen is, because we're returning and we bought these goods on credit, so your creditors control is obviously going to decrease. That's why we're debiting it. Then remember they said we're doing this on the periodic inventory system, so we don't have an inventory account. And that's why you have your purchases being credited, okay? Right? And then obviously input VAT. No, there shouldn't have been input VAT here. There should have been output VAT. Because remember, whenever we buy stock, we claim input VAT. So if we're now returning stock, we also need to reverse that input VAT. How do we do that? By an output VAT transaction. Okay? So this should actually be, let me scroll up a bit. That should actually be output VAT. Okay? So yeah, this should be under liabilities. Okay? And yeah, it should still be a plus, because now what we owe SARS is increasing. All right? And then yeah, you should be crediting output VAT over there. And then over here, let's just double check. So yes, this is correct, plus 11,970. Wait. Amount including that, so no. We should have actually had this 10,294 over here, but it should be a plus. Because remember, your stock should be exclusive of that, okay? Because yeah, we always record it exclusive of that. Then over here, yeah, we should, our creditors control should be the amount inclusive of that, so we should have a plus. Sorry, it's right to have a negative, but it should be a negative 11,970. Okay, and then yeah, here should be. But now our accounting equation not making sense. Just give me a second over here. Okay, so we've returned goods, right? So this should be a negative. Yeah, no, then that's fine. That's going to be a negative 11,970 over here. This is going to be a positive 1,676 over here. So when you add a negative 11,970 to a positive 1,676, you're going to get this 10,294 over here, which is then obviously a positive, okay, in terms of the amount, sorry. But when you look at our accounting equation, we're basically saying assets, which is 0, is equals to, when you add up all the amounts over here, you're also going to get 0. Does that make sense? So I'm just double checking our accounting equation to make sure that the amounts actually are also correctly done over there. Woo. Yeah, okay. 1.8, a debtor returns goods to the value of 3,074 Rand, and a credit note is issued. Remember a credit note? Whenever someone is returning goods to us, whenever we've given a rebate, and also lastly, if we've overcharged, okay? And also that depends whether it's the original. If it's the original, that means we're the ones who are getting it. But since we issued, it means someone is returning goods to us. Okay, assume the periodic inventory system, okay? So we know this is going to affect the debtors adjustment journal. So then we're going to have to reverse sales, okay? That's why we're debiting sales. Whenever we actually make a sale, we know that we credit sales. Debtors control is decreasing, that's why we're crediting it, okay? All right, and then here, again, we should have had input VAT, not output VAT, because we're reversing that sale. Does that make sense? So here we should have had input VAT. My word. All right, it's going to be for that same amount just under the assets column. All right, and then this should be correct. Assets decreasing, yes, by the VAT exclusive amount. And then sales by the VAT inclusive amount. Okay, so that's fine. That just needs to move to there. Okay. Right. I hope it was just this question where we had so many errors. Okay. Okay, but let's move on. So let me quickly just rotate this. All right, so now we're on question 2. All right, we're just on question 2. We're doing 2016. All right, I believe it was shared on the WhatsApp. Okay. And again, just for your benefit, if you have any questions at any point in time, feel free to ask. All right. All right. So, guys, again, accounting equation is definitely coming. It's just a question of, is it on periodic or perpetual inventory system? Okay. Right. Then question 2 is a VAT question. And here they say show all workings as marks will be rewarded for this and round all answers to the nearest rand. Okay. The first question, they say Glacier Industries imports gadget A plus from China to be sold to a client in South Africa. The regular purchase price for one grade A plus is 25,000. Okay, purchase price before a trade discount of 7.5%. Other costs include transport costs inward of 7,500, import duties of 2,800, and cost of storing grade A plus before it gets sold 1,900. Cost of storage. Okay. Make use of the information above. Calculate cost of inventory for Glacier Industry. Ignore that for question 2.1. Okay. already have seen the mistake. Anybody want to tell me the mistake is? Yes, 2.1. So what we've done is we said, okay, for the first one, we know it's 25%, that's the cost. But remember, we get a 7.5 discount. So then we're saying, okay, the cost is then 92.5%. That's correct. Happiness there. Then we have transport cost inwards. Okay? So in other words, in order for us to have this product, we have to incur this cost. We won't be able to sell this product if we don't incur the transport inwards. Okay? Boom, 7.5. Okay, and then import duty, 2.8. That's correct. Now here, storage cost. This is where we weren't supposed to include that cost. Okay. We weren't supposed to include that cost. Other than that, everything else is fine here. Okay. All right. Then 2.2. If Glacier Industries sold one gadget A plus to Wang traders at a markup of 75% on the cost price. All right, can you see that on cost price? So already you know. Cost price is then equal to what? 100%. Okay. What would the selling price including that be? Okay, awesome stuff. Right. Okay. Cool. So first thing first, we build our model. Cost plus profit is equals to selling price. So we know profit is 75% because markup is 75%. And as you guys highlighted, cost is 100%. So selling price is 175%. Okay. Cool. So now what we then say to ourselves is, so here I see we say what? Cost us 75%. Oh, I see what we're doing. So we're using this cost price here. Okay, that's what we're doing. So yeah, just remember we need to knock off the 1.9 there, but the principle is still the same. So we know cost is that amount right there, and we're saying 75% of that, and then obviously we get our selling price. Okay, so this is easy. Now when you have your selling price, remember, we're assuming that they said ignore VAT. So we're assuming that then this amount was the VAT exclusive amount. So here now we then need to say, okay, since this is the VAT exclusive, to get the VAT inclusive for you guys, it will be times 115 over 100. Okay. And then you have your selling price over there. Okay. Right. Then 2.3, it says, would the VAT represent input VAT or output VAT for Glacier Industries and for Wang traders? Okay. So this is a great question. So let me try and stand in front of the answer. So who would be paying input VAT and who would be paying output VAT? If I'm to rephrase the question, that's basically what they're asking. And they're talking about the VAT in 2.2. So the VAT that we just calculated for the selling price of this, what do they call it? Gadget A plus.
So isn't Wang going to pay output VAT?
Why do you say Wang is going to pay output VAT? They're the ones that are buying the product, the grade A plus. Remember, Glacier Industries is selling it to Wang traders. Yes?
I think when you pay input VAT,
Mm-hmm. 100%. Okay. Remember, whenever we sell something, We have output that. On our output, what is leaving us for the client? Does that make sense? Whatever we produced, right? Whether service or a good, whenever we make a sale, we know it's output that. Whenever we're buying something for our inputs, all right, for products that we need to generate our final product, then we can claim input value. So 100%. Okay. Right. Then the last question there, they say, what would be the amount recorded as the cost of goods purchased for Wang traders? So all that you're doing there, I remember in your, I think it's question 3.9 in your textbook. It's quite similar to this. So can you see, what is this? Glacier Industries, selling price exclusive of that is Wang's, what is this? Is Wang's cost of goods purchased. Because remember, we can't say it's this whole amount, this 70,000. Why? Because this 70,000 is inclusive of that. And since they've got input VAT on that, then we know we're going to claim back that input VAT. So we need to say, what is the amount exclusive of that? Does that make sense? Okay. And that's why we're going with the 61,000 that we had over here. Okay. All right. Okay. Right. Again, just remember that there's the 1,900. That's not supposed to be included in the cost. So obviously your amounts are going to be slightly different, but again, just make sure that you get the principle. So that was question 2. This paper, I don't know if a lot of my students would have managed. It's not the easiest one in comparison to other papers that I've seen. But yeah, it's just a question of how well you've practiced. Just a question of how well you've practiced. Okay, so here, much easier question. I can already tell by looking at the suggested answers, they're looking at your individual debtors and individual creditors. Yeah, I think this will be the last thing that we run through. We'll see how, I'll see how you guys feel. If you want to go on and have a break. So, question 3. Yeah, like I said, here you're looking at your individual debtors and individual creditors. Under required says prepare the individual account of Wang in the debtors ledger for Gracia traders for the information provided for the month of May. Okay, prepare the individual account of Nkosi in the creditors ledger for Gracia traders for the information provided for the month of May. Note, no transaction codes are required and round all amounts to the nearest rand. Assume all journals are for the 5th month, therefore CBR5. Okay. I was telling, I can't remember which exercise we were doing. I can't remember when we were in unit 7. No, when we were in unit 8, when we were doing the salaries journals. And you remember in the folio, there was an issue that I had where we were looking at the month of May, but they were saying, for instance, CBR5. No, they were saying CBR4 instead of CBR5. Can you see now where I don't know if it was your class or another group, but it's probably on the recording. The month that you're in, if it's the 5th month, that last number should be number 5. Does it make sense? So this is just now confirming that there must have been an error in the answers for that. So I'm just making you aware of that. Just look out for that. It should be in unit, yeah, because I remember it was a salaries and wages question. When we were posting from the salaries or wages journal to the general ledger accounts. That's where the error was happening. Okay, but anyway, let's deal with this right here. Okay, so as you know, you then read the top. Glacier traders, a registered VAT vendor, has several debtors and creditors. All debtors and creditors are registered for VAT and deal in standard rated suppliers. Okay, VAT is charged 14%. The following 2 balances appeared in the books of Gracia Traders on 1 May 2016. So they're giving us the opening balances for the respective guys. Okay, no problem. The following transactions were entered into for the with the two above mentioned parties during May 2016. Okay. So just in the interest of time, already at this point, you guys just quickly browse through each transaction so you label. This one is for Nkosi, this one is for Wang. So the first two, the 5th and the 10th, that is for Nkosi. The 11th and the 14th, that is for Wang. 15th is also for Wang. 18th is for Nkosi. 20th for Nkosi. And then the last two are for Wang. Okay. Then we say to ourselves, okay, which one do we want to start with? Let's just start with Wang, since they give us his balance first. So, oh, and they also give us his answer first. So we know we throw in that balance. Throw that in quickly, the 12,000, then we begin. First transaction for Wang, we know was on the 11th. So on the 11th, it says sold goods to Wang for 14,800, including them. Invoice number INV 5-15. Guys, can you see how much marks are here? 40 marks. This is what I was telling you guys. If you want a distinction in this module, or if you're like, hey, journals show me 5, make sure that unit 7, 8, and 9, because it's coming in the exam for sure, because they haven't tested you anyway, and they come for a lot of marks. Okay, so boom, there you go. You've entered in that sales. We know this is the debtor, so we know debtors debit to increase, credit to decrease. So then that 14,000. We know when we're dealing with the debtors, we're always dealing with the VAT inclusive amount, because our customer is always paying the VAT inclusive amount, because we're not going to pay that for you. Make sense? So then we put in that 14,800. We know that the balance is then adjusted. Okay, move to the next transaction for Wayne. On the 14th, it says Gracia Traders received the bank statement showing that the check received from Wang on 30 April 2016 was dishonored due to insufficient funds. Okay, the check was for 75,240. Okay, and Wang received a 5% settlement discount. Make the necessary entries. All right. Then here they tell you in brackets JV26 was issued to cancel the discount. Okay. So what are they telling you here? They're telling you that we received a check from this guy last month in April, but the check bounced. That's what they mean when they say it was dishonored. Okay. And we gave him a settlement discount. All right. So now we have to reverse all that, because since we didn't receive the money, it means that he actually owes us the money. Okay. So that's what's happening here. So you just simply write RD check, return to drawer. That's what it means, RD. Okay, check. Then this is obviously in the cash payments journal. Now I'm just going to explain this again, just in case you may have missed it, but I'm sure I explained it before. When we received the check, we recorded it in the cash receipts journal. Remember, whenever we receive money or money equivalent, cash receipts journal. But now, because we're saying that check actually, we didn't actually realize that money, we have to reverse that transaction. We reverse it in the cash payments journal. Okay? And there you can see a 5 there that I was just trying to squeeze in. Okay? Then you obviously put in the 75,240, adjust our balance accordingly. Then we also know, since we gave him a 5% settlement discount, we also need to reverse the discount. Okay? And that's where this JV26 is now coming in. And we know all settlement discounts, whether they are received or granted, are recorded in the general journal. Okay, and that's why we have GJ there.
So
Yes.
for the CPJ, it doesn't necessarily mean it's just to reverse the fact that you recorded it.
100%, all the way through. 100%. No payment was actually made. Just reversed. Okay. Then here, obviously, we're saying, okay, we know this is 95%, by the way. So to calculate this 5%, we're going to say 5 over 95 times the 75,240. Okay. If you want to do that the fast way. If you want to do it the slow way, you're going to say, okay, what is 100%? So in other words, 100 over 95 times this. Then you'll get an amount. That's the whole amount that was owed. then you minus it from the 75 to get the discount. Either way, as long as you get to your answer, I'm all good with whatever. Okay? Right, so you guys, I'm sure that makes sense to you now. Then the next transaction with bank actually happened on the 15th. It says, ratio traders charge interest 12% per annum for 120 days based on an overdue portion of 45,000 of Wang's account. JV 27 was completed. Base your calculation on 365 days in the year and round to the nearest rand. No problem. So we know that interest charged is recorded in the general journal. Likewise, interest, in other words, interest that we are charging someone, which is interest income for us, is in the general journal. And also if we were being charged, so interest expense, in other words. Okay. But anyway, so here what you're going to do is you're going to say 120 divided by 360. Because remember they said 360 day year. Then you're going to say times 12% times the 45,000. And that's how you then get your 18,000. All right. And then obviously you adjust your balance accordingly. And that's it. Any questions there? If they don't tell you, assume 360 days, then you know you can assume 365. Okay. Sometimes they'll even tell you assume 366 because it's a leap year. All right. Then on the 28th was Wang's other transaction. And they went to say, received a letter from Wang's attorney stating that they are insolvent, along with a check constituting a dividend of 35 cents in the rand from the insolvent estate. The payment was based on the amount owing on, as at 15 May 2016. Okay, so 15 May, we're here, so we're saying this is how much he owed, 107,800. Okay, so when they say 35 cents on the dollar, what are they telling us? Okay, what is happening here? Somebody tell me, maybe let's start there. Let's get the whole picture of what's happening. What's happening? What does it mean when someone is insolvent? Someone is bankrupt, what does it mean?
Isn't it that they haven't been able to pay?
They're not going to be able to pay. Don't have money. So now we want to manage this person's affairs to kind of just settle things with the creditors. So what they're now saying is 35 cents in the rand. What does that mean for us when they say 35 cents on the rand? Yes. Uh-huh. Yeah. Yeah. So they are going to pay 35%, as you're saying. But then the other 65 that they owe, basically we might as well just write off, because we're not going to pay. Does it make sense? Sometimes they'll say 35 cents in the rand, as they did here, or they'll say 35 cents on the rand. Same principle. Okay. Right. So what we then do is we say, okay, what is 35% of what was owed? We know that what was owed was 107,800. So then we quickly throw in the date, receipt, and then we put. Did they say the check? They didn't tell us. Did they tell us the check? No, they didn't. Okay, so then yeah, you just say receipt. But if they tell you that in that letter there was a check and the check was check number what, you then put that check number here instead of saying receipt. Make sense? Then obviously we're recording this in the cash receipts journal, all right? And then obviously we're crediting that because it's reducing how much is owed, and then we have our new balance. And this balance, so can you see you don't have to calculate the 65% that's owed, because you know that the balance is the balance of what is owed. In other words, that's 65%. Just to save you a second or two. Then we know that is all getting written off. We know we're not getting the money back, all right? So then we put that journal voucher entry, because we know when it comes to credit losses or bad debts, recorded in the general journal, okay? So then there you have it, GJ5 And then there we go. We credit that amount. And now can you see the balance is 0? Okay. All right. Then this last one on the 35th says the rest of Wang's debt is written off as irrecoverable. All right, JV. Okay, so that is pretty much it's in connection to what we're doing just here. Okay. All right. Cool, no problem. So right. Okay, let's just quickly get through Nkosi's creditors journal, and then I'll give you guys a break so that at least we know we're done with question 3. These older papers were longer than your most recent papers, or your more recent papers, should I say. Okay, fortunately with Nkosi, there's fewer transactions. So again, just throw in the balance. First thing that we do, then first transaction with Nkosi, on the 5th, it says purchase trading inventory or merchandise from Nkosi 72,000, excluding that, sorry. Received invoice SC10. Okay, so we know they're testing us. Do we know that we're supposed to have the VAT inclusive amount there? So quickly we credit, all right, the VAT inclusive amount. Remember, we're in the creditors, individual creditors account. So we know that when it comes to creditors, they increase on the credit side, decrease on the debit side. This is the only place where I see students make quite a few mistakes. Is not knowing when to debit, when to credit, when it comes to individual debtors and creditors. And it's so sad because if we were debiting when we're supposed to credit, you're still going to get the right balance amount. So theoretically, you know what's going on. You just made a mistake in terms of debiting and crediting. So you miss out on marks because obviously balance, you can't give you many marks. Maybe there's a mark only on the last amount there. Because that's a plus minus job. We expect you to be able to plus and minus. Make sense? So yeah, it's just unfortunate. We credit that amount. Next transaction happened on the 10th. It was realized that the invoice number SC10 was undercast. What do they mean by undercast? It means that it was less than what it should have been, okay, by 1,440, including that. Nkosi issued a debit note for the amount. Debit note, remember, we're saying we undercharged you. We need to increase what was charged, so we're going to issue a debit note. And then, so here clearly this was a good, we're good people, because some people can actually say, nope, that's your fault, not mine. So I'm not paying. So here, debit note, put in the debit note. This is obviously affecting your creditors journal, okay? Then that 1,400, can you see it's increased the balance of what is owed, okay? Right. So that was the 10th. Then next one happened on the 18th, yes. Return 20,000, excluding that. Again, they're trying to test you. Of the inventory purchased from Nkosi on the 5th of May, all right, and received a credit note, okay, credit note or CN24, easy stuff. Throw it in. You don't even need to write credit note, as long as you write the document number, okay? But if you want to, by all means, okay? This is obviously a creditor's adjustment journal. Then you just need to calculate, this was exclusive, so that's why we have, wait, you see something here? 20,000 exclusive, so why then are we having 70,000? That amount should actually be more than 20,000. What were we doing over there? So I think here, I actually did the reverse of what was supposed to happen. So can you see, I said, I was actually calculating the exclusive on an exclusive amount. Because I'm saying 100 divided by 114. When I should be saying 114 divided by 100 to get a VAT inclusive. So, yeah. Get a good night's rest before you write. Okay, and then obviously you add that to your balance. Sorry, no, you subtract it because that we're returning it. So that was right. It's just this amount that's wrong. Should be more than 20,000. Anyway, last transaction for Nkosi happened on the 20th. Says transferred 90,000 to Nkosi via EFT as part payment on the account. Part payment. Okay, cool. So again, we know that we're going to debit this because it's going to reduce what we owe him. EFT is all you need to write there. It's coming out of the cash payments journal. Okay, remember any cash amounts and cash equivalents that we're making payment for, then cash payments, and then boom, you adjust your balance that's owed. And there you go, 40 marks in the bag. All right. This is out of 180, so again, you're already almost there. Okay. You got your accounting equation, and this that's half the paper. Okay. So guys, remember what I always told you when I showed you my philosophy: understand, master, and apply. I said, have a strategy. Have a strategy. I'll give you guys a quick story and then I'll let you go. 2-second story. When I did accounting 1B, when I was a student back in the day, there was this section called cash flow. I knew that I could do it, but I knew it would be a lot of work because you had to master these formats of all these things. And I said, okay, cool. I'm not willing to do that. But what I'm going to do is I'm going to understand everything else, inside out. And I did by also looking at past papers and seeing that, okay, the cash flow section always comes. It always comes. There's no ducking and diving from it. I was like, the amount of work involved is just not worth it. So I didn't do it. But I literally mastered everything else. And come the paper, guaranteed, cash flow section came out. Everything else, I did the best that I could do with it. And I came out with 64%, I think it was. So what am I trying to tell you? I'm not trying to tell you leave out sections. What I'm trying to tell you is have a strategy. Have a strategy. As long as you have a strategy, I knew that obviously I'm not going to do as well as I typically would have loved to do because I'm leaving out a whole section, a whole topic. Does that make sense? Now, it depends on what you're gunning for. Remember, I told you guys, if you're going for a distinction, I can help you with that. If you literally just want to pass, I can help you with that. Okay. But the only way we can do whatever it is you want to do is if you actually put in the work. All right, let's have that break because I'm sure we're tired. So let me see you guys at 9:05, and then we will proceed with this here.